Hi, this is Ari Sussman. I'm the Executive Chairman of Collective Mining. Today, we're going to walk you through our presentation. Just a very quick background on me. I've been in the mining industry since the early 1990s, primarily as an investor initially, and then as on the executive side of the industry, I jumped out of investment and into executive roles starting in the late 1990s. Since then, I've operated in Canada and a few Latin American countries. Since 2005, I opened office in Colombia, recognizing the unlimited prospectivity of the country and the lack of exploration in those days due to security reasons, and thought that our best chance of making large discoveries would be in this country. And that's where I've been focused ever since. Prior to Collective Mining, I formed a company which was known as Continental Gold. We discovered, drilled off, and then built a gold mine, which today is the largest gold mine in the country. It was acquired by Zijin Mining for about $2 billion in 2020, but we found more than 11 million ounces of high-grade gold, and that system remained open completely for further growth post the sale. And from what I've heard, it's still growing. From information I'm hearing throughout Colombia from ex-Zijin employees. Here we are with Collective Mining. So Collective Mining was really born on the concept of going after bulk tonnage style targets in Colombia. And let me walk you through the presentation. Very quickly, disclaimer, you know I will be making forward-looking statements, so please be warned in that regard. Very quickly, our cap table, our structure. So it's a tight structure. We only have about 77.5 million shares outstanding. The pro forma cash as of September 30th was about 46 million. It is about $40 million today. When you look at the share ownership table and you combine management, which is in blue, plus insiders and strategic, you will see that we cumulatively own about 45% of the equity, I being the largest component of that group. And as a result, we are really aligned with shareholders in that regard. You can see the 6 analysts that cover us with various target prices. Note the Roth Capital target price is in US dollars, not Canadian. We do trade on both the New York Stock Exchange and the TSX under the symbol of CNL. Fortunate to get the same symbol in both exchanges. Without going into so much detail on every individual, what I will say is this: the key to our success has been having what we view as the best people for the job that we're trying to do at the moment. And as you'll see in our presentation in a minute, we're in the exploration stage. Okay, so I don't have the luxury of listing the very talented young Colombian team that works for us. And this is a team that's came with us primarily from Continental Gold. So we've had a lot of time to train people. But look, in geology, if you look on the bottom right, you'll see David Redding and Richard Tostel. Both of them are very well known. So David was the co-founder of Randgold with Mark Bristow, he was the head of exploration for about 13 years. And that company was ultimately merged into Barrick, and his former partner is the CEO of Barrick today. He was also the former CEO of European Goldfields. If you're unfamiliar with that company, was acquired by Eldorado, and that makes up their assets in Greece, both production and development. And then Richard Tostel in the geology world really doesn't need an introduction. He is regarded by many as one of, if not the top expert in porphyry style systems globally, and we are exploring in a porphyry belt. And I'm going to show you in a minute. When I say porphyry, please do not think of the standard copper gold porphyries. That is not the genesis of what we're looking at, but they are porphyries nonetheless, and we'll go through that. You'll see our board of directors is a very nice mix. 2 Colombians, Angela and Maria, on the board. I'm a strong proponent of having big representation in the country in which you operate. And lastly, Omar Osma, the CEO and president. I'm taking this meeting. He's boots on the ground. I'm the firmest believer out there that junior mining companies will only succeed if those 2 positions live in country. The model of having an overseas CEO or president, I think, is over. These projects are harder and harder to advance, and you need someone there to see the fires, put them out before they even become fires, and have a game plan to make sure that things go well. A lot of misconception on Colombia. I do want to address this. I think it's a very important point. Okay, so look, I hear this all the time. Oh, it's so politically risky. Okay, so let's start with that statement. Okay, so define political risk, because for me, political risk has a few components to it. Number one, okay, does the country have a history of expropriating mining titles? Colombia has never, ever done that in its history in a single instance, so check that box. Number two, and this is really important in my mind, is mining part of the law? Okay, yes, it is in Colombia. Why is that important? Because in other countries, we see mining companies need to go and negotiate on a case-by-case basis with the government, what the taxes will be, what the royalty will be, what the operating mechanics will be, and that may work. It does in many instances, but what happens when the government changes and it turns negative? Right? Then we've seen this story, Cobre Panama being the recent example of that, of how things can go badly in an environment like that. And then to me, the third component of political risk is, what is the permitting timeline? This has become a huge issue in this industry. And for large-scale projects, which means in Colombia they're permitted at the national government, the law stipulates that your permitting timeline is 10 months. Okay, so that puts it in probably the top 10% of jurisdictions globally for permitting in terms of its timeline. It doesn't mean you're going to 100% get told, yes, here's your permit, but it means you're going to get your answer in 10 months. And, and let me say this. So Colombia has a left-leaning government, quite a strong left-leaning government, in place today. It's coming to the end of its life, and it's not been favorable. But in that time frame, since September of 2022, there have been 8 titles for mines issued, and that's 8 out of 8. And you'll note 4 open pit and 4 underground. The last thing I will say on Colombia is there's big mines. Okay, it's not a huge industry yet, but there's big mines. If you look at the second one listed, Cerrejón, owned by Glencore, that is the largest open pit coal mine on the planet. Cerro Matoso by South 32 is the world's 3rd largest nickel mine. You can read the list. Obviously, Buritica, which is the Continental, was the largest gold mine in the country, and the list goes on. Our 2 projects are called Guayabales and San Antonio. For today, we're going to focus only on Guayabales, and let's move in. Last thing I'm going to say, is obviously, Colombia has opened up for exploration, but it's not safe everywhere. The risk in Colombia was and still is to some extent security. You need to be in the right part of the country, and Caldas Department is what they call their states or provinces, is the best place one can go for mining. Why? Okay, first off, it's got the most universities per capita, and as a result, the highest education rate, resulting in a very low unemployment rate. Why does that matter? Because where there's challenging security in the country, the people that are in that business thrive on poverty, and Caldas is not a poverty-stricken department. So guess what? There is no evidence of any of that bad type of operators that operate primarily in the south of the country in Caldas. There's no ELN, there's no ex-FARC, there's no cocaine trade. None of that exists here. This is a wonderful place. The other point here is, as I'm going to show you in a minute, our projects are contiguous to a mine named Marmato. Marmato is the 2nd longest continuously producing gold mine in the Americas at more than 500 years. Caldas only has slightly more than 1 million people in the state. And so you can imagine that in 500 years of mining history, everyone's been touched by mining, either currently or in their lineage. And as a result, it is very pro-mining. And I'm going to show you more of that in a minute. Okay, so before I go into what's exciting about our projects, let's look at the map on the right. There is Marmato. Okay, Marmato, by the way, is one of those 8 projects that got licensed. It got licensed in the summer of 2023, and guess what? It's in full-blown construction, and they expect to be pouring gold in about 1 year from today. We are infrastructure blessed, and I think this point is overlooked too often, especially today in a higher inflation, high cost environment of mining. So you see the Pan American Highway. For those unfamiliar, that highway connects the southern tip of South America all the way up to almost the Panamanian border through Colombia. Okay, so we're right off the highway. We have roads throughout. Secondly, you can see the sketch of power lines. This is hydropower, run-of-river, green hydropower with tons of capacity. In fact, Colombia is the South American leader in hydropower. Virtually all its power is generated in this way. So we've got roads, we've got power at site, and last key point, you see at the bottom below Guayabales, you see town of Supia. This is not a 2,000 person town or village. This is 35,000 people. Well, it's not a city. That is a more than large enough town for a future employment base to be living for a mine. Okay, and so that means there will never need to be a camp here, right? So you've got roads, power, no need for a camp, and this is a winning combination as far as whatever the future capex might be. Okay, why did we pick up Guayabales and San Antonio? Because we recognize this area as being a cluster of porphyries, Marmato being at the southeast edge of a northwest trend. Okay, as I mentioned earlier, don't think copper gold porphyries. These are a little bit different, but these are porphyry related systems nonetheless, and let's go into that. But what I will say is we believe our Guayabales project has by far the best ground, much stronger than Aris Mining's Marmato mine in terms of its future potential, and let's look at it. So now we've zoomed in to the Guayabales project. This is a plan view. So if you look on the right, you'll see the outline of the Pan American Highway and those power lines again. That will align you with where you're looking. The semicircle at the bottom center of the page is Marmato. Okay, and all of those red mining symbols are permitted operating gold mines. Okay, so there are 10 of them sitting within about 3 kilometers. Okay, so before I go into the geology, isn't that an amazing thing? What is the permitting risk here when there's already 10 operating mines that are all licensed? It's quite low. This has already been designated as a mining area for hundreds of years. So excellent place to be. The 4.5 kilometer line is the approximate boundary between the Marmato title and our ground, and all of those ovals, whether they're solid or dashed, are targets that we generated all by grassroots exploration. Okay, the solid ovals are what we deem to be major discoveries, and the dotted ovals are either discoveries that we don't deem to be major yet or are undrilled. Okay, we're going to look at the Apollo system, which is the biggest discovery made to date first, and then we'll talk a little bit about Trap. I do want to mention, you look at the bottom of the image, 2 new targets to be drilled in the first half of this year, Tower and X. We're quite keen on both of them. I'm a strong proponent that we need to keep pushing the envelope here to find more, but let's dig into Apollo and see what excites us. Okay, first on the genesis of it, and this is really important. Okay, so I get asked a lot, what is Apollo? You say it's porphyry, but it doesn't look like a copper gold porphyry. Correct. Apollo is a funny system, okay? It's probably going to be written about by some PhD student or students in the future. I'm sure they'll do the thesis on it. But really what you're looking at Apollo is a gold dominant, but high grade gold, silver, copper, and tungsten deposit, okay, that actually changes its geology at that red dashed line where it says 1,000 meters above sea level, and changes from more kind of porphyry-esque into a more reduced intrusion related gold system. If you're not familiar with reduced intrusion related gold systems, you may have heard of Snowline up in the Yukon in Canada. That is a classic reduced intrusion related gold system. So we've had a reduction environment where the oxygen was being sucked out of the porphyry slowly as we go deeper, and this complete change. What am I showing you here? Why do we have Marmato on one side and Apollo on the other? Because look at this. Okay, so first off, look at the topography. So we are on the same mountain slope. However, we have about 600 meters more of system or rock preserved. Right, our peak elevation is about 2,200 meters above sea level. Theirs is maybe 1,500 meters above sea level. Okay, the upper blue part of Apollo, and all of Apollo for that matter, whether it says ramp zone or Apollo, is all hosted in a breccia. None of Marmato is. A breccia is a wonderful unit because it's got a lot of porosity. What does that mean? That means there's a lot of space for metal-bearing fluids to get trapped. It's a better host than what Marmato has. Now, Marmato is really two mines. Their upper mine, which has been in production, that's the one that's been in production for 500 years. I'm not giving you the resource, or reserves on that here on the slide. It doesn't matter. It's a small producer today. It may be 25,000 ounces a year, but they are in construction on that Marmato Deeps deposit. Okay, and you can see their resource on Marmato Deeps. If you add the measured, indicated, plus inferred, that totals about 6.2 million ounces of gold at around 2.46 or 7 grams per ton gold. And look at their dimensions: 300 strike by 100 meters across by 700 meters vertical. Okay, and that is wide open at depth. That is where they transition from an upper vein system to this reduced intrusion related system, which is more bulk mineable, and their production from that deeper deposit is targeting 160,000 ounces of gold a year. Our entire system is bulk mineable. I give you just two intercepts that are in white: 450 meters at 2.7, 359 to 3.32. These are big bulk tonnage intercepts. But look at what happened at that 1,000 meters above sea level, elevation. We transitioned, just like Marmato, into a reduced intrusion-related system. Big difference, look at the grades we've hit. 57 meters at almost 8.2 grams with a very high include, and 15 meters at 20 grams. Why is ours appear to be much higher than Marmato's, which is 2.5 grams? Two reasons. Number one, the porosity of our host rock. It's a breccia, as I mentioned, had more space for fluids to be trapped, more grade. Secondly, we have an overprint of what we call CBM veins. These are the late veins of a porphyry that produce high-grade veins. They're still strongly overprinting at depth. They also overprint the blue part of Apollo from surface. And so that combination is, at least very early days, we've only just started drilling ramp, has introduced very high grades into the system. So quite excited by that. Next two holes from ramp are due hopefully next week. That's when the lab is supposed to deliver the next two holes, and I'm hoping we'll see some more impressive grades, obviously subject to what the lab delivers to us. Now, how will a mine get developed here? And this is really important. So I mentioned the benefits of having power at site, of having roads, of having people, but there is a fourth big advantage, and you can see it here. So looking on the northeast side of this section, you see where it says potential site for mine infrastructure. This isn't something we generated by accident. This was a third-party engineering company that helped us build our last mine at Continental Gold. We brought them in early and said, in mountainous topography, where are we going to have tailings in a plant? And that is the location they picked. Note the elevation of that. Okay, so that's about at 1,000 meters above sea level, and we're going to develop, or someone will develop, this long access tunnel, about 4 kilometers, that will cross through Trap, through Plutus, into Apollo, and Tower, which is totally undrilled at this point. Who knows if it'll turn into anything, but will get drilled this year. In Box, we drilled some in 2024. Okay, so you're going to have access to these systems. But we're talking about Apollo here, so let's look at the importance of this. We're going to have about 1,000 vertical meters of the deposit in a gravity-assisted situation. So what does that mean? That means instead of having to, for underground mining, instead of having to truck rock up, high labor costs, high diesel costs, etc., we'll be able to use literally ore pass chutes where we drop rock down out into that elevation, then it'll either be trucked or conveyed out to a processing plant. Secondly, water. There's water underground mines. It's almost 100% of the time. This will be no different. There's definitely water in the system here. When water flows with gravity instead of against it, it becomes an almost no-cost center. You don't need to pump. Okay, so this is going to help make this a very low-cost operation. One thing I should have added before, Apollo outcrops right at surface in high grade. So it starts at 0 meters, and we've now traced it 1,150 meters vertically. Why is this slide important? Last thing in this image for production, because we're drilling down at this depth, okay, for ramp. If we weren't going to access the Apollo deposit at this depth, it would not make sense to be drilling a kilometer down, because when you put a cash flow model or discounted cash flow model, economics around a future mine, that won't add any value. But when material from the underground would come out very early, through that underground mine, it's going to add value. And note how close the dots are to the ramp. So it's going to be very accessible very early, and quite exciting. Last thing, now I'm showing you a plan view of Apollo and potential upside. The darkish black outline that looks almost like an elephant, that is our internal block model. We do not have a resource estimate yet, possibly 2026 for that. The reason we don't is we're still expanding with drilling. You saw ramp, it's growing. So this is game-changing stuff. But let's ignore that and let's look at this red circle, okay? Outside of this block model area, look at some of these intercepts that we've had. We have what we call the northern silver zone, moderate grade over big widths, of silver. Look at the gold vein zone. Those intercepts start just below the soil profile, so very close to surface, right? Those aren't insignificant. 300 meters at north of a gram. None of that's been put into our block model. This is all future growth. Okay, so obviously we don't have a resource estimate. I don't have a crystal ball for how big this will get, but you can clearly see this is going to get very big. And I think Apollo has a legitimate chance of growing well past 10 million ounces of gold alone, possibly quite a bit more, dependent on what happens at Ramp Zone, with the drilling this year and what happens in this northern area. I should add one thing. The budget for the year is about $30 million. We are fully funded, and we're going to drill 60,000 meters of diamond drilling. This will be our largest program on an annual basis to date, so quite exciting. Last thing, another way to look at Apollo. Okay, so you can see the ramp below. We've talked about that. I'm not going to focus on it. Look at these intercepts. You can see a whole bunch of them. You understand why this is a bulk system that starts right at surface. Okay, so we don't just have high grade deep. We also have it shallow. And, mining is all about continuity of systems. And this is really remarkable, over 1.1 kilometers. We don't see a bottom to the system in ramp yet. Why not? Maybe this will go down another 500 meters or 1,000 meters. Colombia seems to be special this way, with the verticality of these porphyry-related systems like we have here in terms of their vertical dimension. I've heard through the grapevine that our former mine at Buritica is now drilled well over 2,000 meters and still in mineralization. So maybe we'll get that here. Only time will tell with drilling. Last thing, very briefly, trap. We consider this a second big discovery. Okay, so we've drilled 700 meters very loosely of confirmed mineralization. We have all kinds of styles here. It's all veinish related, but we're seeing different things. We see a high-grade vein system, which was just announced recently in the far southeast, where it's this discrete vein system. January 2025, where we drilled 2.8 meters at north of 200 grams. Okay, that's a different style. We have a more bulk style tonnage vein system in the north, where we see sheeted veinlets. Okay, you can see some of those intercepts. I like to highlight the including sections more than the long intercepts, because I believe that's what's going to be mined here. This system won't be open pitted at all, like potentially Apollo. I think trap will be mined mainly underground because the topography is more complicated for open pit mining. So we're looking at the top left, trap main zone, 40 meters at 4 grams. I mean, these are big bulk areas, right? You can see 60 meters at 1.9 grams. Et cetera, et cetera. And if we can mine this in a bulk method, I'm sure we can mine it in a way where cutoff grades would be, 1 gram or less for underground mining. So there could, in theory, be very attractive margins here. Again, this is early days. We think this system can get much better to the northwest. We're vectoring towards a feeder system to it. The feeder system might be, in this case, a copper gold porphyry system. We have evidence of it, and all the evidence is pointing northwest, and that is where you're going to see us focused in this year in 2025. So pretty exciting stuff. We have 5 rigs turning today, 6 and 7. Rigs number 6 and 7 will be arriving over the next 30 days. In fact, 6 will arrive to site probably over the next week. 7 will arrive in the month of February, and we're going to be very active with a lot of information. Okay. Last thing I will talk about is ability to operate. Okay. So what can we compare Colombia to in this regard? I would think Peru is a good analysis. I don't think Chile is. Geologically, yes, but not in terms of what you're facing, as a company. You're in Colombia, there's 50 million people. Okay, so odds are very high where you want to go mine, you're going to have population centers. And why I'm comparing it to Peru from a sustainability perspective is the success or failure of a company is going to be dependent on the management team and their ability to operate, meaning you're going to see wins and losses depending on who it is. Okay, we're in a very pro-mining area, as I mentioned. Excellent information, right, to know that. But, what do we do here? So we're in the coffee region. So we have a strategic alliance with the Colombia Coffee Federation. You can see its division called Comité de Cafeteros de Caldas, right? That's the state level division of that group on the top left of those strategic alliances. All those are strategic alliances that we have. And this is amazing because we're the first mining company, first group ever to align with Coffee Federation. We did it in our prior company at Continental Gold, and we've done it again here. And this has been very valuable for coffee and mining to go hand in hand and say we want to cooperate together and work together for success. And sustainability is everything. We've done a very good job at it to date. I would like your listeners to know that I do think this is always the biggest risk for most projects. And so we have to spend as much energy at this as we do at exploration. And those two together will bring a future mine here. Okay. And you can see some of the stuff that we have done, in terms of investments. We always invest in alliance. This is really our model that works well. So our dollar isn't alone. It co-invests and grows, and the impact is bigger. University of Caldas. I mean, this is the most prestigious public university in the country. We have a strategic alliance with them. Extremely important, right? Having university support goes a long way. And understand that universities are generally not huge proponents of mining. Right. So getting buy-in and support from a university is a big, big win for any mining company. And we're fortunate to be with the University of Caldas, which is very prestigious. Last thing there, these are our catalysts, for the year. I think in the words of the new president, Donald Trump, where I live in the United States right now, drill, baby, drill. And that is what you're going to see from us, 60,000 meters. Push the envelope into 2026, and let's see how big we can grow these systems.
So Ari, could you tell us a little bit more about, so prior to founding Continental Gold, what did you do? What's your background?
Okay, so my background really was never intended to be in mining. This was an accident in life. I think maybe those are sometimes the best kinds of accidents, right? So look, I came out with dreams in finance, in managing money. And out of school, with a partner, I started a limited partnership convertible bond hedge fund. So we were focused on convertible arbitrage. I don't know if your viewers know what that even means, but very simply, a lot of companies will issue convertible debt instruments. And if you look closely enough, sometimes you'll find a spread between the debt instrument and the equity, and you look to hedge it. Okay, it used to work very well. Now it's far too competitive an industry. But we set up this fund, and 75% of the money was allocated to that model, convertible bond arbitrage, and 25% couldn't do anything. And I'm a Canadian originally, grew up in Canada, and at the time lived in Toronto. And so the 25% that could invest in anything happened to accidentally catch an incredible wave in mining in the 1990s. To date, we have not seen a wave like that because it was not driven by high commodity prices. It was driven by discoveries. Okay, so there were amazing, big discoveries made. Obviously, there was also a very bad X on the mining space in Borex, which I'm sure most people who follow mining have heard of. But before that panned out, it was a huge one. I mean, it went to a $6 billion, I believe, market cap, right? But we had Robert Friedland discovered diamond fields, in Canada, which got bought out for, I think, something like almost $4 billion, which is a lot of money in those days by Inco. And there were many big gold discoveries. So it was a wonderful time. It also made everyone who knew nothing, including myself, seem smart because you could throw darts, at mining companies and they basically all went up. That is a fact. And then the bear market came, and the bear market came in 1997. Okay. The Briex scandal came to light, other problems came to light, and I decided, not too intelligently, but I decided in 1998 that, there's a bottom because everything went down, and I got out, I sold out of the hedge fund world and got into mining. And what I didn't anticipate is that bottom would go from bad to worse. 1999, 2000, 2001, it started to turn really for larger companies, but juniors were still in a lot of pain. By the way, Jasper, I will say this for your listeners, for you, you're a younger guy. It's reminiscent to today. Okay, so don't despair, because we had producers go first, right? Then more advanced explorers like ourselves, like Collective Mining, started to move, and the really small stuff caught no bid for at least a couple of years. I mean, it was really desolate and tough to raise money. But then it turned, and in 2004, all the way to 2011, including the dip, that took place with the credit crisis, the great financial crisis, it was a good place to be. So I strongly believe, okay, that we're on the dawn of a brand new bull market. I think this is important for people to understand, and that the producers, especially in gold, their bull market started in the fall of 2022. The non-producers, the explorers, that bull market only started, from what I see, in the summer of 2024. We're in inning one, okay? And historically, forget all the reasons you can come up with the why gold should go higher, or copper should go higher, or copper go lower. If you just kind of count 10 to 12 years, okay, that is the cyclicality of this business. Okay, so 2011 was the top. 2024 was the bottom for the explorers. There's 13 years. I mean, it's close enough, right? And here we are, and that means we should probably be getting ready for a 10 or 8 or 12-year bull run, and there will be some big corrections along the way and problems along the way, of course, but the uptrend is underway, so fun times. From there, I got into a project which is in the northern part of Canada, and then later I moved into Latin America, as I described, and I'm in Colombia for many years.
Thank you. Just to comment on the market today, I mean, it's juniors generally have had a hard time, but I mean, the market is selective, and if you actually have real success, you get rewarded. I mean, that you're an example of that.
Jasper, let me give you some feedback more from the institutional world. Okay, so I see a change.
Yes.
Okay, I'm fortunate to have had success, so I tend to get more meetings than maybe management companies that haven't been successful. But I've been through New York City recently. There is more interest. Okay, I was getting meetings that I wasn't getting 6 months ago. Okay, so there's now generalist money now looking. I would not want to. I don't want to say that it's deploying massive amounts of capital yet into the Explorco pace. It's not. But it's now. It always starts by them looking first and then investing second, and the looking has already started. A comment of interest, what is unusual about this one is the funds that are set up to be exclusively investing in resources are not getting the inflows. So they're not the leaders. I think they're going to be the last money in the door. It's the funds that are generalists saying, okay, now's the time to allocate some money to gold or copper or whatever. They're actually the leaders, but we are seeing that interest level now. M&A in 2024, as you know, was far more robust than it's been. The pause in M&A, I think, in the latter half of 2024 was simply caused by Newmont deciding to unload a whole whack of projects after they bought Newcrest. They've effectively now unloaded all of Goldcorp, which they acquired in 2019, I believe. So that's all been dumped into the market. That concluded this week with Discovery Silver buying Porcupine. That's it. They cleared the deck. I think we're going to see a unbelievable year of M&A, and M&A brings in institutional money. Okay, they don't need to be geniuses and understand the geology of every project. What they need to do is call their favorite mining-focused banker or salesperson and say, give me a basket of 10 equity names that you think have a chance at being acquired, and I'm going to allocate an equal amount to each, and one or two of them get acquired, and they'll all make a lot of money, and that is how this business gets underway, and we are here. So this is going to be a very exciting year for everybody.
Just talk a little bit about Continental Gold. What was the overall return if you invested from the start? And also, what did you learn generally from your journey with Continental Gold?
So let me go backwards. Okay, what did I learn? I mean, we had a lot of challenges. Okay, the biggest being we had a terrorist attack not on our main project, on a second project. Okay, by ex-FARC in a remote area. Where some geologists were murdered. It was the most tragic point in my life. Okay, so I learned not ever underestimate security risks. Be more vigilant than ever on that. I learned that building mines is very hard. We built a mine. We spent $550 million to do that. Okay, it's very hard work. Okay, because what can go wrong does go wrong. But I also know that I have a good nose, and my team does, for big systems. Okay, and you should know you have a mine on a project without the economics around it quite early in the drilling process. Okay, and you know this because in this business the surprises are generally bad, and when you're drilling and the surprises are good, that means you have a mine. Okay, so we need to keep that in mind. We had that at Continental Gold. The surprises were good. Okay, and guess what? We have it again today. We keep getting surprised to the upside accidentally. We're not geniuses. We're not the smartest people in this business. It's just Mother Nature has blessed this area immensely, and so that is some of the lessons that I've learned. But Colombia, you need to persist, because if we want big deposits to feed the voracious appetite of the West. Okay, because as we know, Jasper, I keep talking about that. I think we should call this cycle resource wars. Right, it really is a race now between East and West for resources. That seems to be how it's playing out. I don't think that's a good idea. I wish we all worked together, but that is what's happening. I believe that the Colombia, Ecuador, Guyana, Suriname, northern Brazil is going to be the feeder system for the West of minerals to come out of the ground going forward now. And because it's far faster to permit in these jurisdictions than it is in the United States, Canada, and Europe, right? So this is really important. It is as far as how did this start? What did we start at? Well, this started as a private company where we financed it, in about 50 cents a share. It went up to Continental Gold. That is, it went up to a high of about $10 a share from there. In 2011, 12 at the peak, we were smart enough. I give myself credit for this because I think it was one of my best decisions to sense that the market was toppy, that we were nearing the end of a run because it was getting out of control. So we in 2012, we raised about $85 million at $9.60. And that really saved Continental Gold because it funded us 13, 14, 15, 16, and 17, and then we went and built the mine and raised a lot more money. And that took us through the lean years of time, and our share price sunk. We ultimately, sold for just under $6 a share. Okay, so it ended up as a good return. I wish it sold for 20. But last thing I will mention, looking back, what I could have done different was the share structure out of the gate of Continental Gold. There were too many shares. I think almost every company has too many shares. So we built Collective Mining differently. Okay, and Collective Mining only went public in 2021, was formed in 2020. And there's only 77.5 million shares outstanding, and we have about $40 million in the bank today. Okay, so now there's torque in the share price. We don't need to dilute indefinitely, right? And so we're not going to end up, we don't hope, at hundreds of millions of shares outstanding. Maybe if we get really lucky with the cycle, we can end up here at the end of the line, whether it's a sale or even a mine build, with only 100 million shares outstanding. It's conceivable. That would be an incredible position. I mean, the market cap of Collective Mining today in Canadian dollars is about $550 million. Okay, we sold the last company at $2 billion. Okay, gold price was, I think, about $850 lower at the time, many differences. We've seen Filo trade for, correct me if I'm wrong, but just north of 4 billion Canadian. Is that right? You would know. Okay. And we've just seen, was that right? And on a 100% basis, I think so. And
yeah,
we
it's
just
right.
saw
4.1.
And we just saw Osisko Mining trade at a similar valuation. That's a function of the cycle being stronger. So I do think that big projects are going to trade now in the 2 to 4 billion range, and I don't know if we'll sell. It would have to be the right price, but I do think we're going to get I'm confident with all things being equal with the market, we're going to get a big multiple like that if the success continues with the drill bit as we advance.
How did you consolidate the Guayabales project, which I think was why it hasn't really been explored before?
So only a little bit had been explored, but look, okay, this is the talent of my technical team. We recognized Marmato and this area as being part of a porphyry cluster system. Okay, that's not how it was classified previously, and that's not how it was explored. Okay, and that was the opportunity, visiting it prior to acquiring it. I mean, it took a lot of negotiation. There's more than one owner of the mineral titles that we had to consolidate. But visiting it, you could see that there were all these late-stage porphyry veins, which we call CBM veins, everywhere. This is what's really special about it. They overprint everything, but overprinting porphyry rocks, right? So we said, wow, here's a chance of at least two systems overprinting. In our experience, if you want a big deposit, you need at least two styles of mineralization together at once. And so we had the ingredients here, and all that was sitting beside Marmato, which is almost 9 million ounces of resources. Okay, measured, indicated, plus inferred. And then looking at the porphyry cluster, realizing Marmato's on the southeast edge of it. We consolidated what we believe is the bulk of it, if not all of it. Right. And so we said, this is an amazing opportunity. And Jasper, there's a saying in mining, the best place to find a mine is next to a mine. Right. That's how it works. And so here we are next to a giant, a giant resource. And we've been having some good success.
How large is your equity stake in Collective Mining, and how important is it to your own net worth?
It's extremely important. I have exposure, mainly shares, but a little bit of options to just over 11 million shares. Right, so I own, give or take, 1/7 of the company personally. I'm very aligned. We will not make our money on G&A salaries. We're going to make our money on the equity. So goal here is to maximize value as much as possible and do it in as short a period of time. Right, if I could, when we had Continental Gold, we had to build a mine because we were in a long bear market. Right, and selling prior to construction was not the value add proposition, so we built and then sold. Okay, maybe this time, if we're right on the cycle and we're in inning one, year one of the pre-production stories, maybe we'll sell in the bull market, and maybe we'll get really surprised on the valuation. I'm going to bring that up again. Look at the margins of the producers today, especially in gold. Right, we've never seen this before in my life. Right, so. I mean, in fact, if you look at the last, I think it's 3 quarters, and if gold mining was a sub-index of the S&P 500, it'd have the highest free cash flow margins of all industry. That is incredible.
I get why you have a CEO in country, but how does your role as executive chairman differ from Omar as CEO?
So I don't manage anything to do with the day-to-day boots on the ground. Okay, so I provide. Well, I tell our story. I mean, I'm the one in charge of trying to, raise money and gain investor interest. But I provide the strategic vision as a chairman to the team. Okay, I'm involved, obviously, in the operation, but I'm not down there, all month long. I try and go down once every 6 weeks to visit. So I provide the vision from the experience, and they operate. Omar complements my skill set immensely because he's a wonderful operator and planner. I'm more of a high-level thinker, so they really go well together.
You're cashed up $40 million USD right in the treasury right now.
Correct.
Perfect. And the Agnico Eagle Mines, they were up their stake to 9.9% in the last financing. What was their rationale for going into Continental? Or Continental, sorry, Collective.
For Collective, look. So they're the leader of large companies, right? I mean, this is the best senior producer in the world. I mean, look at what they've done in terms of valuation relative to Newmont and Barrick. They're well larger than Barrick in terms of market cap, and they're very close, I believe now. I haven't checked in a little while, but very close to Newmont, right? Good companies need to own big systems eventually, right? You never have enough resources as a company. And the exploration end of our business has gotten worse and worse. I would argue that the cupboards in terms of new discoveries, in precious metals and in copper is the most bare it's ever been in my lifetime. Okay. And that's due to a lack of talent or understanding how to explore. So you need to be investing and giving companies like ourselves a chance, because if we find 10 plus million ounces and it can be pulled out of the ground at a rate that works for a large company like Agnico, so say 300,000 ounces of gold per year or more, how do you not own it? Right? How do you not own it? Because if the project can be longevity, to demonstrate longevity, so a company could come into Colombia and say, is there a chance I could be producing at Collective's project at Guayabales and maybe San Antonio for decades? Yes or no? Yes. So that's a big check. Can it produce at a velocity that we like? Yes or no? Yes. So if you can build a cornerstone asset in a new country, you would go into a new country. Has Agnico gone into Colombia with an operation? Have they mined there? No. But you'd be crazy not to be thinking about that if you were Agnico. Rio Tinto's now, drilling in the country, right? They're moving people from Chile to Colombia because they're looking forwards, not backwards. Freeport-McMoRan, the most conservative, supposedly, base metal player, has come into Colombia, right? So, you got to go where the elephants are going to be found. This is elephant country. Canada is not elephant country anymore because it's been quite explored. So yes, there's big discoveries to come, but they're generally so far north and remote that it's problematic. So you got to go into the Colombias. And I think this is a good place. So I think we're going to see, will Agnico buy us? I have no idea. Will someone else buy us? I have no idea. We're going to plan the company to build the mine, but obviously we'll see if we sell along the way.
Super. And the 2 million warrants, which could bring in 10 million Canadian into the company. What's the expiry date on those?
It's 2026, and they are all owned by Agnico. They're at $5.01. So those are the only warrants outstanding on the company.
How does the budget for this year look like, both in terms
$30 million,
of exploration?
$30 million, 60,000 meters of drilling. Okay, that is the drilling costs in Colombia are amazingly low. Keep in mind we're drilling deep, and we're still at around the $280 per meter all-in mark. US, okay, so we report in US dollars. So very good. I mean, why is that? Because we have good access to power. We drive rigs to the locations, and we have supplies in towns nearby. We're not helicoptering into the middle of nowhere with no power, right? And so that's what it's going to cost us to drill and operate the company. I mentioned we put a lot of effort into sustainability. Our social license is strong. We need to maintain that. That's it. So, I think after this, I think next year we probably need to drill maybe 60,000 meters more, and then we'll really be done with Apollo. I think we'll be able to put a very big resource on it, I hope, at very attractive grades, and we'll be advancing other targets simultaneously.
And the 30 million, does that include G&A or is...
Yeah, that's all in. That's 100% all in to operate. G&A for us is not high. It's quite low. We actually don't even spend that much money on investor relations, believe it or not. We're lean that way. We don't even have a position for investor relations in the company. I find it redundant. And not enough value add generally, unless you can pay big dollars. We're not in a position to pay big dollars for that position yet. That's for Barricks of the world and Newmonts. So we operate quite lean. We have 120 employees, right? There's only of those, there's only 3 that live outside of Colombia. So 117 of 120 live on the ground at the project.
Besides the management and Agnico Eagle, who are the core shareholders, and how much is institutional versus retail held?
That's always the hardest thing to answer, because Bloomberg, which is where you get the information from on the institutional shareholders, is never up to date, and for whatever reason, different funds file at different times. But I would suspect from everyone I know that it's probably 70% institutional, 30 retail. somewhere in that range. It would be a good guess.
So, Guayabales, just to confirm, there are no royalties on the project.
So both our projects, Guayabales and San Antonio, we have option agreements which we're paying annually to own 100% off with no underlying private royalties or streams or anything. They're clean, right? And that is critical, because I can tell you that large potential acquirers today are shying away from projects that have royalties on them. And we've seen too many juniors make this mistake, saying, hey, look, I'm not diluting shareholders because the markets are bad, so I'm putting a 4% or 3% royalty to, say, Franco-Nevada on. You've just hurt the project badly by doing that. Okay, you're always better off doing equity. It's always going to be cheaper in the long run than it will bring royalties. I'm not saying we wouldn't do a royalty eventually, but that's a mechanism one wants to save to help finance construction, not exploration, ever. Big mistake.
When do you expect to execute the earning agreement and hold 100% of Guayabales?
Okay, so for the Guayabales project, we have option payments totaling less than $3 million that are owed in sequence between today and the end of 2030. And then post that point, so over the next year from there, we have an option to eliminate an NPI, that we've given to the vendor, for a total of about $11 million for the vendors, for a total of about $11 million. So that would be the total spend, but the NPI is really based on production, right? So that's the assumption you've got a permit and you're constructing. So if it's part of the capex for a mine, it's quite a small number when you think about $11 million in 2031. It's a long way out. So we have very little amount of money owed annually between now and 2031, and then we have a lump sum payment, so to speak. And San Antonio as well. I know it's not a priority project, but both of them will own 100% with no royalties, no streams, nothing attached.
You don't think you'll execute it earlier than that?
That's our option to do it, right? But right now, look, if we're in a bull market, which I know we are, it's, we talked about it, I believe it started in the summer of 2024 for the non-producers, earlier for the producers. If the equity market really opens up and the valuations, continue to expand, absolutely we would look to at some point, raise enough money to execute those options and clean them up, right? And just own 100%. It's always better to own than have an option agreement to earn in. So yes, but no, not in the, all things being equal as we stand today as a company, even with $40 million US in the treasury, no. That is not in the cards because their money's going into the ground.
Thank you for being here today, David.
You're welcome. Yes.
So, could you tell us about yourself and tell us a little bit about your career?
Yeah, I've been in the mining business about 45 years. I was a geologist. I suppose my real success was with Randgold as head of exploration, and we made several discoveries. Then I had a period of being a CEO with European Goldfields and Auris Mining, and then I went back to my first love, which was exploration again, and I joined Ari Sussman in Continental, and we had a big success there, both in terms of making a bigger deposit and in terms of selling it to Zijin, and then I guess Ari got bored. I got bored, and after about 2 or 3 months, we all said to each other, "Let's go and find something else in Colombia." Well, look, we had some ideas anyway, but we picked up a particular area called Guayabales, and we made a discovery. So long and short of it is that my career is about helping people find new deposits and making discoveries. So I've been lucky enough to be involved in about 6 or 7 of them in my career. So I've enjoyed that very much.
Are there any discovery or product that you have worked on that you're particularly proud of?
Yeah, I guess it's never a singular thing, but I managed the team that discovered Marilla in Randgold. I think the Buritica project in Colombia is pretty impressive. I think the Lulu deposits in Mali were also a big discovery. Tongon in Ivory Coast. So there's been a number. I think I'm most particularly proud of the new one, Apollo, because we found that from nothing, completely from scratch, brand new.
So if you talk Apollo, so there had been no previous exploration work, or at least no drilling.
Not at Apollo. No, Apollo was literally found by our geologists going up streams and looking at the rocks, and then doing rock sampling and geochemistry, and then dragging me up there, and we all basically thought it was interesting, and we were drilling holes to the north of Apollo actually, and we said, let's turn the rig round and drill this new geochemical and rock anomaly, and then we found it. So, but the main credit for Apollo really should go to the Colombian geologists Henry and Mario, who worked for me and really did all the spade work and kept nagging me and saying, Dave, you need to come and look at this. You need to come and look at this. So that's what happened. And then we drilled it. The way to understand Colombia is that we have three belts, really, gold bearing belts. You've got three mountain ranges, the Western Cordillera, the Central Cordillera, and the Eastern Cordillera. And the Middle Cauca Belt is probably the most prolific in terms of discoveries. And you'll see that star and a number of these crosses occur on the Middle Cauca Belt. And the Middle Cauca Belt is Miocene in age. So what does that mean? It's about 6 to 8 million years, so not very old rocks. And the way to think about Colombia is that these mountain building events have occurred over a couple of hundred years, but the main driver for porphyries, breccias, epithermal veins has been the Middle Cauca Belt, where the mountain ranges were pulled apart a bit, and you had all these fertile intrusives push in and bring lots of metal with them. And so, good examples of deposits in the Middle Cauca Belt are Marmato, Buritica, La Colosa, Quebradona, and of course Apollo, our big discovery. So Colombia is very fertile. It's the way to look at it is it's a bit like Peru was maybe 20 years ago. So Peru 20 years ago had very few discoveries, but some had been made, and the Middle Cauca Belt probably has 100 million ounces discovered, but it's still in its infancy. So it's a good place to be. There are elephants there, and more elephants to find.
If we zoom in on Guayabales, so it is a porphyry cluster, right? You have multiple porphyries.
It is. It's a combination of things. I mean, I think the way to see Guayabales is porphyries, vein systems, reduced granite systems. We found about 6 different styles of mineralization within the Guayabales project, and that really is good news, because normally with these things, the more different styles you find, the more prospective an area is. So in a typical gold field, to find 6 or 7 different styles of mineralization means you're in a very fertile gold bearing belt, and we have porphyries, brecciated porphyries, vein systems, reduced intrusive systems. We have everything.
How many mineralizing events do you think this system has been subject to, and what's the age of the rocks?
Well, the age of the rocks is about 6 million years old, and in these porphyry epithermal systems, the events are quite condensed, probably within 500,000 years, but you get many pulses of mineralized system within that 500,000 years. So you've got porphyries, you've got vein systems, you've got reduced granite systems at depths, you're going to get it all in the same area, which makes it very prospective. So there's a couple of things to say here. I think the first thing is that you've got the deposit of Marmato, only one and a half kilometers from Apollo down the road. And if you look at the development of the Marmato, the gold-bearing corridor trends west-northwest and goes through all these targets you see in our license. And then that 4.5 kilometer line there is probably the boundary between the two. And what you've got here is a gold camp, really. There's over 10 million ounces discovered at Marmato, and probably if you take the historical mining, you're probably looking at more like 20 million ounces, because a lot's been mined for 500 years. And then we managed to secure all this ground up here, and we're making new discoveries. So in addition to Apollo, where you see some of the hits here, 520 meters at 2.8, we've also got a number of other targets around Apollo where we've made additional discoveries. And so we've got a cluster of targets, and then we've got a new target up in the north called Trap here, where we've also made a discovery. So we've only been really drilling here about 2.5 years, and look how many discoveries we've made already. And I guess we would say that Apollo is the flagship of those discoveries so far.
What methods work here? What's best for identifying prospects?
Well,
do you have any outcrop soils? What geophysical methods are good, etc.?
I mean, geophysics it gives you broad architecture, but generally speaking, the best methods that have worked here have been feet on the ground. So our geologists have gone, there's not that much outcrop, probably 10%, but there's streams with exposure. They map the streams, they take soil, they look at the rocks, and our best prospecting tool really has been the drill bit. We've drilled and we found targets through drilling based on surface geochemistry.
So although I think, at least per the last news release, 100,000 meters had been drilled, give or take. So how has that been distributed between Apollo and the other targets?
Yeah, I think you'd probably say Apollo's about 70,000 meters of that 100,000 meters. Probably Trap's about 15,000 meters of that 100,000 meters, and then the other targets would make up the balance, just reconnaissance drilling in a number of the other targets.
Let's zoom in on Apollo. So I think what's would be best is if you could just explain what Apollo is.
Okay, so Apollo is a brecciated porphyry. So it's a porphyry deposit with brecciation inside it due to an explosive event, and then on top of the breccia system, you've superimposed a lot of late stage veins. Okay, and those veins have brought in higher grades. So one of the positives of Apollo deposit is these multiple pulses or phases of mineralization, which mean you've got a large deposit grading 2 to 3 grams on average, and that's what makes Apollo so exciting. The other thing that makes it exciting is that you've got mineralization, economic mineralization from surface all the way down to 1150 meters below surface, and that system is very much open at depth, and we're still expanding the system in a number of other directions, particularly all the northward areas. And so it's a big deposit, as you can see from the dimensions, 600 meters by 395 by 1150 now vertical. That's a big system, and there are not many of these found in the world that are fully preserved like this one, that goes from surface down to 1150 meters. And some of the intercepts we've had are remarkable in terms of, I think we've had 15 intercepts over 1,000 metagrams per ton. Now that's a grade accumulation, but I mean, exploration companies, you're lucky if you get one of those or two of those. We've had 15 already.
How is this ore, or I can't really call it ore body, but deposit dipping or sort of?
Okay, it's dipping northwards steeply. So I think I can find you a section in here. So that's an east-west section, but it really dipping. It's quite steep. It's like a cone shape almost. You see that? And it dips more to the north, really. Okay, so steeply dipping to the north, but it comes all the way to surface, and as we go deeper, it funnels out and gets even wider.
Is it getting thicker as you go deeper? It looks like this when, at least if you look at this image.
It's definitely getting wider, and recently we've been drilling these high grade zones. These I guess I should switch to. We've been recently drilling, and there'll be a press release out next week where we will show more of this information. But I mean, we're hitting. There's 1150 meters below surface. We're hitting this new zone, this ramp zone, 18.85 meters at 20 grams and 15.6 at 20 grams. I mean, these are highly economic value. So this system goes all the way from surface down to there and is very much open at depth.
As is showcased here, you have a brecciated porphyry with some sheeted, precious metals veins on top, and then you have, as you recently discovered, a ramp zone. What is a partially reduced intrusion-related system?
Interesting. What you see is that the Marmato Deeps has been classified as what they call. There's over 8 million ounces there known in Marmato Deeps here, and that's classified as a reduced intrusive system. So you don't really have any copper there. You have mainly a reduced sulfide called pyrrhotite and gold. But if you look at that elevation there, it's very similar to our new discovery at depth, the ramp zone, which is also they not completely reduced because there's still some copper at these depths, but partially reduced. But the geology and chemistry seems to be changing at depth. So the way to look at Apollo really is, we have all this preserved that Marmato doesn't really above it, and then we have the potential for what Marmato was finding at depth, starting at this level and going deeper.
So the ramp zone, what's driving the higher grade?
Well, in fact, the recent drilling we're doing orthogonal to the whole deposit is showing that the high grade isn't only confined to that depth. We've got high grades all the way down through the deposit from surface. And now that we're drilling sort of more orthogonally across the deposit, we're finding more internal high grade zones. So Apollo has high grade at shallow levels, and we've now discovered high grade at deeper levels. So one of the positives of Apollo going forward is going to grow in terms of ounces and grade now that we're drilling it in the correct way.
Is the mineralization more consistent, or the grade variation more consistent in the ramp zone, at least for the higher grade gold mineralization?
Well, the ramp zone's a new discovery, so we don't really know yet because we've only got, we've got one hole in it. We're hoping for some new intercepts, next year with results in that. I mean, we're waiting for the laboratory to give us new numbers. So, it's a bit early days with ramp, but if I take you back to, this plan view, we've got consistently high grade at different elevations within the whole deposit. So, this deposit, initially we were drilling it from pads in this area, but now we're drilling it from pads in the north and going down through it as it dips northwards and going all the way through it. And we're getting much more continuity of the high grade zones. So much more to come from Apollo. I think a lot more record intercepts to come and a lot more grade to come out of Apollo. So remember, this looks like it's densely drilled, but the spacing is very close here. In fact, the best spacing at shallow levels is probably 50 to 70 meters, and deeper is 1 to 200 meters. So still a lot more drilling here to do to understand how big this could potentially be.
If you just look at the first 200 meters at Apollo, what do you think the average gold equivalent grade is?
Probably 3 grams, I would say, at the moment, which
okay, so that's
for a bulk style, it is good. But then within that 3 grams, there'll be higher grade zones, and probably the first 200 or 300 meters, you take the lot out. But below that, you'd follow the high grade zones. Okay.
makes sense.
You understand it. That makes more sense to you, I'm sure.
You also have the gold vein zone, and you have the northern silver zone, which actually was quite recently, or very recently, sort of discovered. Could you talk about that? Talk about the size. Talk about what you know so far about these two zones.
Probably best to talk about this diagram here. So here's Apollo. Here's potentially a vein zone peripheral to Apollo with good grade for shallow open pit mineralization, and then suddenly in the green is the silver zone. So the way to look at Apollo isn't the current blackout line of what we've defined so far. The way to also look at it is that there's a lot of expansion potential to the north, and finding a silver zone is also very positive because that's another style of mineralization that we hadn't anticipated. So that red line there, it really highlights the growth potential of the deposit. It's still big.
How many holes have been put into the gold and northern silver zone? It looks as if there's just like 3-4 holes into each hole.
3 holes, look. So it needs a lot more work drilling.
So I was just saying, so in the gold vein zone, what kind of mineralization are you seeing there? How does that differ from sort of the shielded veins in the Apollo?
Well, this is more vein only, but lots of them. So you can see a zonation really from Apollo, which is this huge brecciated body with lots of late stage veins, to peripheral areas with high grade veins. But if you can imagine, when you want to mine this one day, you'll however you mine it would push back into these areas, certainly at shallow levels. So the deposit becomes bigger.
How much of the system is really oxidized, and is it sort of only confined to the northern silver zone?
Or oxidation levels are only about 50 meters vertical. The bulk of this system is a sulfide system, but I mean, the way to look at Apollo is we've announced all the metallurgy, and the metallurgy is good. We get excellent copper concentrates, very high recoveries, including gold and silver. And then when we're not in the copper zone, we get excellent cyanidation or CIL results, up, averaging about 93%. So, Apollo has the ability to generate a number of metals. We have a shallow tungsten zone in the Apollo deposit. We have copper, silver, and gold, and then at depth we have silver and gold. So it and all the metallurgical work has shown that we don't really have any issue in extracting metals. So it's a big opportunity, and it's still growing. I
mean, you use gold equivalent, at least besides silver zone. But so if you just talk about Apollo, or the main Apollo system, and the gold vein zone, what is the metal split?
It's really a gold deposit. I think that the best way of looking at Apollo is it's a gold system, and it's going to have credits for copper, silver, and tungsten. Probably tungsten only a few percent of the total credit, because it only goes from surface down 150 meters. The copper will probably, and the silver will probably give you combined about 30% of the metal, and the gold system would give you about 70% of the metal.
What is sort of the minimum grade for the copper to be recoverable? Because in some Intercepts,
the average
like
grade of the copper is about 0.3%. On average, which is not bad for a bulk tonnage system like this, but you can recover by flotation copper from 0.1% all the way up to 1% in places.
And how is it for silver?
Well, the silver grades probably in Apollo, they're unusual in that they're in the 40 to 50 gram range, which you don't normally get in typical porphyry settings. So that's why we say this is not a typical porphyry setting. It's a brecciated system with many pulses of late stage veins superimposed on top, and that therefore you get this beautiful relationship between gold, silver, you get tungsten as well, and you get copper.
So, by the way, have you looked at recovered tungsten? You have some.
Yeah, we're getting about 75% recovery we get from gravity work. So again, a very saleable product. The tungsten mineral is scheelite, which is easy to separate with gravity and would form a concentrate that we could sell. So, strategically for Colombia, it's a valuable metal.
Do you have an indication of where the source is to these deposits in the Guayabales district?
Well, I think with all these porphyry and vein systems, the sources are driven from depth, and the metals come up from depth, and they precipitate in the rocks, in the porphyry rocks. But the heat engines that drive these systems, the convective cells, are deeper. And that's why, with porphyry systems, it's all about drilling and drilling deeper. And some of the areas that we've drilled are maybe not as shallow as others, but, if we drill deeper, we probably find more of these mineralized systems. So the sources of porphyry and porphyry related vein systems clearly come from the depths, from the intrusive magmatic systems.
So, what are the next steps for if we just speak about Apollo in terms of drilling next year?
Okay, so the main focus of our drilling next year will be a 60,000 meters program, and I would say 85% of that program will be focused on Apollo and defining high grades internally in the Apollo system, both shallow and deeper. So the priority will be the high grade subzones, and at depth the ramp zone.
And I assume you will also do the gold vein and the northern silver system.
Yeah, that will be part of Apollo. That's all part of the expansion of Apollo. But Apollo has, you shouldn't forget that, Apollo has the ramp zone isn't that deep because, where we would put our infrastructure, we can tunnel in at that level. And then all this high grade above there can be dropped down to that level. So we'd attack this deposit from the shallow area, and we'd attack this deposit from the deeper area with a proposed access tunnel.
But that access tunnel won't be in place next year, most likely, at least not finished.
Well, next year is about drilling. So we're going to do a 60,000 meter program next year. We're going to drill 7 rigs in the area, 5 of which will be into Apollo. So that's going to be, you're going to see lots of expansion in Apollo, lots of good high grades coming out. We will aim to get a resource out sometime in the middle of 2026 based on all this drilling.
So in what direction do you see, or directions do you see the absolute most expansion potential at Apollo?
I think internally with grades. So we believe that the expansion of Apollo will be to increase the grade. So, if we go from 3 to 4 grams up here and greater than 3 grams down there, and then the expansion of depth, it looks like we're on the top of a Mamato system here, so that could expand another 200 or 300 meters down there. And you shouldn't be afraid of all this expansion, because we can access it at different levels. So this is going to be a tier 1 asset. I can tell you that now. It's going to be a large asset. big resource.
But how can you vector in to actually improve the grade, especially at the top where you already have drilled fairly dense?
We are drilling a number of holes here. You see what we do? We go from the north and we do directional drilling, and we have modelled all these high-grade zones internally within Apollo. Do you see them? These purple areas are all greater than 2 grams. Okay?
Yeah.
And if you look in section, all these high-grade zones relate to veins, or they're not really singular veins. They're vein arrays or stockworks of veins. And some of the stockworks go in this direction, and some of the stockworks go in this direction. And what we're doing now is we're drilling orthogonally through the deposit, and we're going to do this at various levels. And we're going to understand the continuity of these high-grade zones as we get deeper in the deposit. And that's going to add to the grade of Apollo. So what I'm trying to explain to you is that the grade of Apollo is understated. And with more of this drilling, we will find more of these high-grade zones, including 116 meters at 4.88, 39 at 4.4. You see 23 at 2. So all these zones internally here, drilling in the right direction, we'll be able to trace them to depths and increase the grade of Apollo.
I would like to move over to Trap. So Trap is a lot larger. The footprint is a lot larger than the other targets. Is that based on soil sampling or geophysics, or how do you measure that?
It's based on a corridor. It's more of a linear corridor, and I'll show you that in a minute. So that doesn't mean it's necessarily bigger than Apollo, but it means that you're going to follow more linear zones. So they're more vein-related zones.
So could you explain what Trap is and how it does differ from Apollo?
Okay, so Trap is really a series of veins or veinlets or stockwork veinlets in an alteration zone. So it's what we call the shallow level of a porphyry system. Okay, very shallow. So if you want to see Trap, this diagram shows it well down here. So you see it's more linear zones. Do you see them? And that's how you should understand Trap. And we know it's very open to the north here, and a big focus of our drilling next year will be to try and expand to the north.
Maybe you could explain geometry of Trap based on the drilling that you so far have conducted.
The geometry of Trap is really these broad areas with 1 to 3 or 4 grams in, like this area here, and then there are some other areas that are 30 to 40 meters wide that are very linear that you can follow for long strike lengths. And so really at the moment the best results of Trap are north of this fault. What's happening south of this fault is we don't really understand it yet. We need to do more drilling, but north of the fault we've had some really good results. So what you've got at shallow levels 200 to 400 meters at 1 gram, and then inside those you've got 40 meters at 3 to 4 grams.
Mineralization starts from surface, or is there any cover?
From surface, yeah, all the way from surface.
What questions will you be trying to answer at Trap in next years?
We'll be trying to demonstrate its continuity and extensions northwards, definitely, because that's where the best grades are at this stage.
Could you give us an overview of your other regional targets?
In simple terms, I'm showing you gold values here. So you can see Apollo there. You can see ME, which is southeast of Apollo, down here. You can see Plutus, which is a big porphyry target here. Victory is another porphyry target. Trap is a linear vein zone here. Exon Tower, our breccia targets down here on this side. Box is another linear vein target. And we use this resources triangle on the right here to explain the status of each target. So Apollo and Trap are the more advanced, and they can reach resource status first. Plutus and ME are still follow-up drilling, and the ones in yellow here are still earlier stage. But you can see from the distribution of gold in rock here and gold in soil how prospective the whole area there. So if you were to take that distance from there to there, that's about 6 or 7 kilometers, and if you take from there to there, that's about 3.5, 4 kilometers. So it's a big area with lots of targets.
How will you prioritize next year in drilling? What targets are high priority besides, of course, Apollo and Trap?
I told you that we the bulk of the drilling, 5 rigs.
Yeah, I know Apollo, but besides in your regional program,
the regional program, we will focus on some reconnaissance drilling of Exon Tower and some more drilling of Trap. That will be the main focus of the regional program for Guayabales, but we will also be drilling San Antonio projects. So if we go down to San Antonio, we're definitely going to be more drilling at Pound, which is a breccia target, and we're going to be drilling in a different direction from before. And we're going to be drilling this target down here, Euro, and there are a bunch of targets west of Pound. We're going to do some reconnaissance drilling. So there will be a drilling program, reconnaissance drilling, to outline another big discovery at San Antonio next year.
San Antonio. So it's also a porphyry system, and you have brecciated vein. Yeah, it's just
porphyry breccias, veins, intrusive systems. They're all very much.
It's all the same as Guayabales, yeah. Really.
It is, yeah. It's just at an earlier stage, and it sits on the other side of the highway there. So you can see San Antonio here, you can see Guayabales there, and this is the Pan American Highway, and here's a massive big power line down the middle of it. So we're blessed with good infrastructure in this area for discoveries and development.
How many meters do you think you will allocate to San Antonio next year? And what will be the depth for primarily focus on the drilling?
At this stage, it's still reconnaissance, so probably about 2,500, 3,000 meters in total at San Antonio. The one thing to bear in mind with all the drilling we do is it's results dependent. So if we keep hitting good results, we'll put more meters into this area.
But the holes, will those be primarily sort of sub 500 meters with some fences, or will there be more sort of deep drilling?
They're shallow holes, so 500 to 250 meter holes. It's really it's we have a discovery at Pound. We want to see what its dimensions are. So we're drilling to understand its geometry and grade.
Makes sense.
Always great.
So what I would like to understand or get your point of view on is, so from an explorationist point of view, where do you envision Collective mining in 2 years from now?
In 2 years' time, I see Collective as having a very large resource at Apollo and some additional discoveries. We are a company that is growing all the time. Apollo's getting bigger. Trap is a new discovery. We're going to make more discoveries. We're a company where if you invest in us, not only are you investing in Apollo, which is going to be a tier 1 asset, but you're also investing in lots of upside. And who knows what the future holds? Maybe somebody finds us attractive enough to buy us. That could be an option.
Could you summarize what metallurgic test works have you so far done?
So I would say at Apollo, though we don't have a study, we're to finish PEA level network. Okay. To summarize let's summarize it very simply. We have no metallurgical problems. Okay, this is pretty straightforward stuff. The how we envision Apollo producing, at a commercial scale in the future, is we're going to have a split circuit. So you'd be familiar with the split circuit from Lundin Gold, which is relatively close to us. Our split circuit will have 2 components. The component where we have copper above whatever the cutoff grade is based on economics at that time, you will produce a flotation concentrate and then sell concentrate, and when it's below, you will ignore the copper and you will produce a gold doré. The results from all the test work we've done, you in the concentrate, you're going to have copper in the low to mid 90s. Recovery rates with unbelievable silver recoveries, which is a weird thing in this deposit for the flotation part of it, and high gold. And then in the doré, you're going to be in the 90s for gold and much lower for silver, which is standard. I probably somewhere in the 60-ish% range on the doré side for silver, but in the flotation side, you're looking mid to upper 80s, believe it or not, which is highly unusual. And there's something just of interest. It doesn't matter why it happened. We don't really understand why, but somehow in this deposit, the silver minerals have impregnated the chalcopyrite mineral, which is the copper mineral that we have. So in the flotation side, as you float copper, silver just naturally goes with it because it's part of the copper. So we're going to have this very valuable precious metal rich concentrate to sell, somewhere in the mid 20% for copper, which is pretty standard. That's what you want for a copper con, but it's going to be well north of 1,000 grams per ton silver and probably somewhere between 30 and 60 grams per ton gold in the concentrate side. So highly attractive, and low impurities. I mean, that's the other thing. When you make concentrates, you worry about impurities. The big one being arsenic, which I'm sure you know about. Chile as a smelter complex for all its porphyries is really up to its eyeballs in arsenic. So any material they could buy in the future that is low arsenic to help offset will be awarded nicely.
Well, let's talk about ramp. So, I mean, a reduced intrusion-related system, 3 holes have been put in it so far, which 2 were, quite recently released. Around 8 grams per ton gold equivalent, wide intersects, 50 meters up to that. So, what implications does that have for Apollo, especially if you can prove that it has size?
Okay, so look, let me start with the absolute honest answer. It's early days, we don't know. Okay, but we have an analogy, which is Marmato Deeps, right? So for those unfamiliar, the Marmato Deeps portion of the Marmato deposit is a 6.2 million ounces of gold out of their total resource of about 8.7. It's the bulk of it. And the construction that's happening right now at Marmato to build a larger mine is 100% focused on this Marmato Deeps. That is a reduced intrusion-related system. However, the grade of Marmato Deeps is only around 2.5 grams per ton. Okay, measured, indicated, maybe a little less than that actually, measured, indicated, plus inferred, right? We're seeing the same mineral assemblage, but our grade so far from early drilling is much higher. Why? Right? So number one reason is we're in a breccia versus they're in an early porphyry phase. Breccia is more porous as a rock, as a host rock, so there's more space for metal to be trapped. Okay. Secondly, we call them CBM veins, but these are late stage, high grade porphyry veins. Ours are still going strong. They're at the top of Apollo. We see them all the way down almost 1.2 kilometers below surface. We don't see any change. They're overprinting in places of ramp. And third, a difference from the early drilling at ramp versus Marmato Deeps is we have silver. They don't have any silver in it, right? So we you saw our intercepts. We're reporting 30 grams silver in over 50 meters, give or take, right? So there's some silver. So those 3 elements from early days are juicing the grade. Now, you said, what could this mean? Okay, so the width of Marmato Deeps is 300 meters, and the vertical is 750 meters. That's the deepest drill hole, and it's wide open at depth. They have 6.2 million ounces at around 2.5 grams, as I mentioned. Well, what if we have the same thing? I have no idea, but take a higher grade, and you can see the potential that this offers. Right? We're only 1.75 kilometers away, right? And they both start at the exact same elevation, so exact same meter above sea level, almost to the T. They start. So is this an event that's everywhere too? Is between Marmato Deeps and Apollo? Could we find more of this? I don't know. It's speculative at this point, but most of that is our ground. We're going to test that at some point. But you can get the picture that this has the potential to become very large if we follow a similar dimension path as Marmato Deeps, and that's only what drilling will prove.
Since our interview with David, you have made another discovery, and that was the discovery of the sort of a new high grade. You have a subzone at Apollo, and that's where you find your best intercepts mentioned 150 meters at almost 4.7 grams per ton gold, over 6 grams per ton gold equivalent. How did you discover it, and how does this change your interpretation of the system?
Well, the simple answer is we turn the rigs around. But the more complicated answer is why, and why didn't we do that sooner? So we're in a breccia, right? And so when any coherent mineralization, coherent meaning if it's, you can measure its dip, its plunge, when it comes into a breccia, it dumps its metal into this matrix. And so it becomes harder to ascertain the direction of which it started and where it's heading. So we were wrong based on limited information early about which direction. So we're drilling the wrong way. So now that we're drilling orthogonal, or perpendicular, we are picking up more gold. There's no question, because we're crossing what would have been sheeted veinlets, but they're now dumped into the matrix of the breccia. And so we're getting much more gold. It's very exciting. And what these subzones really are, another way to describe them would be broad mineralized zones. So it's really where we project that different styles or different mineral systems intersect each other, and there's more porosity there, and hence there's a trap, for a lot of fluids to get caught, and that's bringing in the grade, and that's what we're seeing, and it's pretty spectacular. We should have, I think it's 3 more holes from that before the end of this month, before the end of February, and my betting is on the 5th hole. I was down at site recently and saw it. It looks really good.
So you have the high-grade subzone at Apollo, and then also at depths you have the ramp zone. With this year's drilling, do you think you will be able to come close to test its limits, or?
No, I mean, look at this is going to. If you look in our corporate presentation at the plan view of Apollo, you'll see we have a lot of potential north where we have drilling. I mean, we have intersections, a few hundred meters away, up to like 302 meters at over a gram from near surface. However, the known body, of Apollo, let's see what happens with ramp. The goal here is to not only put together a large future resource estimate. I mean, it's already going to be a very big system, but it's growing, but also demonstrate that it can produce, at a big rate on an annual basis. And if we keep expanding the ramp zone at depth, that's going to go a long way to hitting that mark of big annual production too, combined with size. And that would be a home run, as far as what the project would offer. Remember, the reason it's called ramp zone is because it is roughly at the elevation where the underground access tunnel for a future mine for the underground portion is going to come in. So although it's deep from surface, it's very relevant because it's not deep from where you will access it, and it's stuff that would get mined potentially very early in the mine life. Really relevant.
How often will you release assay results on average?
It just depends on the number of drills and the speed, but we've got to be every 3 weeks throughout the whole year, right? I mean, that's, the lab's been pretty good. So I think it's every 3 weeks. So it's very news. We have a lot of news this year. I mean, no question of that. If you like drill holes, we're your company.
So you touched on Colombia as a mining jurisdiction, but how are the permitting timelines to get into, not exploration, to actually for mining permits?
I haven't seen a study done. If you have one, I'd love to see it. But, I'm going to bet it's in the top 10% of permitting jurisdictions globally in terms of its timeline. When you file at the national government level for a permit, for an environmental license, once the process is deemed started, okay, the law says it will take max 10 months. Okay, since this new government's been in power, there's been 8 permits issued for mines. Okay, so compare that to Canada, the United States, and elsewhere, that's a lot more. It's a good jurisdiction. Now, is it easy to permit is the next question. That all depends on the company, right? It all depends on your ability to gain support. And, we had a lot of success in permitting previously, given the location that we're in next to Marmato, a mine, and there's also another 9 operating mines, small ones, but operating mines, within 3,000 meters or 3 kilometers. It's a pretty good setup for a future permit. I should add that, the option agreement at Guayabales, that those payouts include us owning 2 small mines that are licensed. So we will be taking one of those and amending the license for a larger mine in the future, not starting from scratch. That's even easier, and that's what we did at Continental Gold, by the way, too. We took an existing operating small mine and made it bigger. So it's a really good jurisdiction. Now you could fail, Like any jurisdiction, if you don't have a social license. And that's our biggest risk, in my view, is to make sure we maintain the good social license that we have right now. We put a lot of energy into that.
What efforts are you undertaking to keep the community in your relation in good standing?
So it's a two-pronged approach at a company our stage, and it's a model we built previously for Colombia. So the first approach is to leverage your dollars that are spent by strategic alliances with either governments or non-government or private company organizations, right? You go a lot further if you partner with people and you each contribute versus you doing it yourself. So an example of what we're doing right now, which I think is pretty amazing, is we are the only mining company in Colombia to have a strategic alliance with the Colombian Coffee Grower Federation. Okay, and the two local governments are involved in that too. So yes, the programs are good, okay, but everybody does good programs. It's not a function of did you build a school, did you donate a fire truck, etc. It's what you say, right? And the value of this one is we go hand in hand with coffee, door to door to the agriculture homes, and coffee says we like collective mining and their ability to mine, and we say we like coffee and we coexist. Okay, and this is really valuable. So the education side of it. The second part of it, that the most important, and this is the one that is overlooked by most companies, open dialogue platforms. Okay, so every month in Supia, in the major town where we're based, there is an information and a discussion session, and the discussion is not on collective mining. Okay, we created a theme for this area, which is, could this part of Colombia be a transition energy hub for the future? Collective would contribute to that with whatever copper we have, tungsten, and silver. Gold, obviously, as you know, is not a transition metal, but we've brought in the public utilities company and other companies. And this is a mechanism where we have this meeting. Anybody can come from the community and complain whatever they want to complain about. They can say they're mad at us. They can say they're happy. They could be mad at everybody. And this is the best thing. When you let people vent what they're feeling, the anger doesn't build up. And this is the most important thing, is open dialogue and transparency leads to success.
Do you have any in Indigenous groups, by the way?
No, we don't. And, there are some outside of our area of influence, like relatively close by, but no, we don't. And that's a positive. It was one of the criteria when we looked at the project. Now, and if you don't believe me, look at our model. I mean, they didn't have to do a prior consultation or anything to get licensed.
There have been rumors that the Minister of the Environmental Agency is pushing to extend permitting timelines. Could you talk to that?
You can't do that. Okay, so this is why, so I may have mentioned before, I can't remember, but if I haven't, I'm going to re-mention. For me to enter a country, not as an investor buying mining equities, but as someone who's buying a project and looking to develop it, mining needs to be part of the law. Okay, if it's not, I won't enter. Okay, because then you're at the whim of a politician deciding to change things unilaterally. Okay, so to go and extend the timelines, as you mentioned, if that's what you want to do, you would have to change the mining law, meaning it would have to go through Congress. It would have to be reviewed by the Constitutional Court. I can tell you right now that this current government in Colombia has lost all Congress support. The last holdout that was still in an alliance with the Liberal Party, they broke the alliance, when was that? A week ago Monday, which was one day after Trump threatened Colombia with a terrorist for about 8 or 9 hours. They walked away. So there's no chance that you can just unilaterally say we're going to extend the timelines because it'd be in breach of law. If the agency tried to do that, okay, let's say they tried to do that, because it's law, you as a company have the ability to go to the public attorney who is independent of government and ask he or she or their office to accompany your process to ensure that the law is followed. All politicians are very scared of public attorneys because it can destroy them, right? So that works very well, and Colombia moves very efficiently. I as a politician in Colombia, if I was one, I would not want to stray from the legal timeline on anything.
Artisanal miners, both legal and illegal, is that an issue that you have to deal with?
Very small. Okay, so we're really fortunate. Let's start with our main discovery, Apollo. Okay, so because it's a breccia-hosted bulk tonnage system, and I mentioned before that the coherent mineral structures like veins lose their form as they flood the matrix, it's not conducive to artisanal mining. Why? Because artisanals need to see a quartz vein or a carbonate vein that they can follow with their eye and chip along it. That doesn't exist in Apollo, so it protects itself. We have a little bit of artisanal mining north of Apollo, but because this is and that's in coherent structures, but they're sheeted veinlets, and this is key. The veinlets being only millimeters in thickness. Okay, so even for artisanals chipping along a veinlet, they have too much dilution and they don't make any money. And how do we know this? Because we identified it as one of our largest risks when we've got this project, and the number of artisanals has cut in half since that time. It's not because we've done anything to discourage them from mining in that area, because we don't care about that area, to be frank, but it's just because they're not making money, even at current gold prices, because it's just too low grade once you dilute. And look at Marmato Upper. Okay, so I imagine 500 years ago that must have been something spectacular. But if you look at Aris Mining's production, right, they produce today from the upper mine. It's only around 20,000 ounces, and the grade is less than 3 grams per ton. That's sheeted veinlet mining, so it's not that lucrative or attractive. You know, they have wider veins than we do too, much wider, right? I mean, I don't think you could do that. I don't think where the artisanals are in our ground, there's only like 100 of them. I don't think you could actually even mine as a company and get 20,000 ounces per year out if you really wanted to do that kind of smaller mining. So we're lucky in that regard. The geology protects us. The other thing too is the artisanals in this area are all local, right? This is local mom and pop mining, generational mining. There aren't bad actors involved in it, etc. So it's pretty good, and they protect their territory, which is helpful. So there's the risk of invaders is quite low on top of that.
But so what do you think the size of the prize could be for Guayabales?
Look, so obviously I'm arm waving, and with the caveat that we haven't proven this yet. But when you look at this cluster of deposits, and I'm including Marmato in that because it's part of the same geology, in my mind, there's no question that there's going to be more than 30 million ounces here. Okay, maybe 40 million ounces. Okay, that I think is going to happen. Now the question becomes, Jasper, what percentage of that can be economically mined? Right? I don't know, but it's really big. Okay, I mean, Apollo itself. If I mentioned the analogy to Marmato Deeps in terms of dimensions, like if that happens, Apollo could grow to 20 million ounces just by itself. I'm not saying that's going to happen. I don't have a clue. Nobody does. The drill will prove or disprove that, but you get the potential here. It's really big. And just making that statement on Apollo excludes all our other targets, right? So there's going to be mining here for a generation. There's no question of that. It's going to be decades upon decades of production coming out of this area. We will, I don't think, be around to ever find all of it, but there'll be drilling going on here and more being found for a very long time.
This is a topic that there are different thoughts on. So but I would like to hear your thoughts on putting out an MRE and when that could make sense, if at all.
Okay, so we always said internally at a board level, we said when we find the limits of Apollo, we'll do an MRE. We don't have the limits, right? So I don't have an answer to that. I mean, maybe it's 2026. That would be the earliest. But I don't have an answer to that yet. If we're growing, let's keep growing, right? If the psychology of the market changes, and maybe it has, because I saw today Dakota Gold, I don't know if you know that company in South Dakota, they put out an MRE and their stock shot up 20%. So I think that's maybe the first example of a company in the last maybe 5 years plus where the stock actually went up on an MRE. So maybe that's an idea. If it becomes attractive to do that again, we would do it. But otherwise, we're sticking to our goal of seeing if we can find more than 10 million ounces before we put in an MRE. I mean, that's what we'd love to be able to do. I don't know if any company's ever put out an initial MRE at plus 10 million ounces before. So if we can do that, it'd be awesome. Let's see.
And next leg of funding, how are you thinking around that? Does it have to be a strategic investor, or is that even something you would desire?
Look, I think we were at the sentiment bottom when Collective raised money in March of 2024. right? I mean, we brought in the strategic, which is now public. It's Agnico, right? Or, you know who that was, Nico Eagle, and that was the best option we had at the time, because if we would have done conventional equity, I think we would have gotten the money, but I also think our share price would have dropped 30 or 35% on the announcement of that financing. Instead, we got a premium deal. Things have changed, okay? It is much better today than it was just over a year ago. So I don't know how we'll get the next leg of money, you know, when we need it for 2026 or when we raise it in 2026. But if I'm right, you know, and we're call it 8 months into a bull market, there's going to be more and more capital available for this space instead of less and less, which is what we've been living with for the last really 12 years, right? Where just the pool kept shrinking and shrinking. It is growing.
What's your plan for creating competitive tension?
So I would have answered that differently a year ago, but I've seen some things that shocked me. You know, for example, Osisko Mining, which obviously we know is bought by Goldfields, but you know, you would have thought there'd be no competitive tension in that, given they had already JV'd 50% of the project to Goldfields, and yet there was extreme competitive tension. Look, I think the competitive tension is only going to increase for any quality project if you can hold on a little while longer. Okay, I mean, you know, we've seen the producers, excluding the seniors, because the seniors always had big corp development teams. We've seen the intermediates just reload or rebuild their corp dev teams, which were gutted because of the bear market and no interest in doing M&A. So now they've rebuilding. And, you know, we've had this little bit of a lull in M&A, which was really predicated on Newmont dumping effectively all the Goldcorp assets in North America. And I want to, you know, and so now that's done. I mean, that is complete. Okay. So I think this is going to be the best M&A year. And I think there's almost no quality gold assets, actually copper too, for that matter. I don't think there's too many. So, you know, it's a good position to be in. And I think there's going to be bidding wars starting later this year. I still think we're very early in the M&A. I want the viewers to hear my opinion on that. I believe the next 6 months or something like that is still going to be dominated by producers buying producers. I don't think it's ready, you know, for producers buying explorers or developers, you know, unless they're very advanced yet. But that is coming. And that's always the most exciting leg of the M&A, because most of your listeners own the explorers and developers versus the producers, I would assume, right? And so there's some good times coming for sure. You know, gold price, the margins are through the roof for producers if they can maintain their costs, which they look like most of them are able to do it now. And going to be some big numbers. I'm of the belief that we as an industry for high quality projects are going to get used to seeing these $2 to $5 billion takeouts, not 500 million to 2 billion that we were used to before, because the margins are so much wider. You know, for the producers now, they can pay more.
So, to my ultimate question, where do you envision collective mining in 2 years from now?
So, we're going to be at the top of the first peak of the Lassonde curve, which is the top of the exploration peak. Okay, so at that point, we're going to be at an inflection. Do we build or do we sell? Okay, so I'm hoping we'll be at our peak valuation for that point in the cycle. You know, so and I think we're going to be a lot higher, you know, which is obviously subject to the gold bull market or the metals bull market staying intact, which I believe it will. So I think we have a long way to go. I mean, look, we sold Continental Gold for $2 billion Canadian, all in. Okay, so that includes the debt, and that was at a gold price that was about $1,000 lower an ounce in a much tougher market. So we're trading at a 600-ish million Canadian market cap today. You know, I hope that we can evolve into that $3 to $4 billion takeout range. I think that the long life of the asset and the quality of the ounces will put us into that category, and let us go drill and get there.